consider him to be, from a security standpoint, a real authority and a pioneer, in the crowdfunding space. So he's a point of reference not only to me, but to many in the industry. So I thought that would be important for you to know, who is talking to you guys about the regulatory concerns around crowdfunding. So let me give you a little bit of our background. I'm a New Yorker. I actually live down the street, but I am originally from Colombia. And surprisingly so, in Colombia, crowdfunding has been in place for over 20 years. So I want to share with you a little bit of that experience. How many of you have effectively participated in a Kickstarter campaign or an Indiegogo campaign? Okay, and how many of you have actually invested in an equity-based crowdfunding platform? Okay, so I thought, it's a very new thing. Now, we all know how it started, as a donation-based model against rewards. So we were very interested in understanding the behavioral economics or the psychology of the crowd. What made somebody wait for an iPhone gadget over 8 months that was being produced, somewhere else, when they could effectively buy it, in an AT&T store? Why? What was behind that? So the significance of participation is really an important driver in the equity crowdfunding model. People think, that it is just a function of return, and it is not. The big change comes from a psychological standpoint, because as you will see, we believe that the collective intelligence of the crowd is greater, than any individual participating in that crowd. Let's talk a little bit about the Securities Act. The way I understand it is that in 1933, after the Great Depression, the government wanted to prevent fraud. So effectively, they created the public offerings that you had to register so that you wouldn't be, like a scammer presenting things to the general public. And then they created the private offerings. And the private offerings, because they were quote unquote risky, you would exclude the general population from the private offerings. But as it happens to be, the private offerings included commercial real estate. And commercial real estate, hotels, or extended stays, or office buildings, or big rental projects, happen to be the ones with the most predictable cash flow and appreciation derived from that. If you compare, you could argue that commercial is more stable than residential and backwards, but in my opinion, if you analyze historically what has happened, commercial real estate, specifically in big metropolitan areas, is the best asset class there is in the industry of real estate in general. So to preclude the smaller investors to be scammed, effectively you were excluding them from participating in the safest asset class there was. And that happened for 80 years. So the law effectively said that you could only let accredited investors participate, in this type of investments, let's say in a $100 million project here at the heart of Manhattan. But you couldn't do open solicitation. You couldn't get 1,000 guys with $100,000 each to participate in the project. You had to call the guy with $100 million. End of story. That explains the current ownership structure in the biggest metropolitan areas in the United States. Because for 3 generations and for 80 years, they have been privileged with the fact that the pipeline of deals has to, by law, come to them. You couldn't do open solicitation of individual projects. End of story. So, and it was valid at a point, because in 1933, there wasn't even TV. You had to do open solicitation if there was to be some, by phone, and spotting out scams was very, very difficult. So it had a certain right to be done the way it was done. But things are very different now. So then, in an industry like this one, again, we decided historically to protect the general population from scams and from fraud by excluding them from the safest and most predictable assets there was. That was the conclusion. So now let me tell you how we tackled the problem down there in Colombia. This is Bogota, where I was born. And 20 years ago, there was no financing, like in many emerging countries. So developers had to start a simple version of cooperation. And people ask me, what is there so new about crowdfunding? You know, this is typical equity syndication like we have seen here many times in the 80s and before and so on and so forth. And that is true. Cooperation historically has been there everywhere. In Colombia, it started 20 years ago with the last financial crisis when there was no financing. Developers gathered around, you know, and they pulled in investors. And obviously what happened? There was fraud. And they took the money and left, you know. Give me all your money, we're going to be doing this fantastic project, and they took off. So what happened was that the government intervened, and they created what is called down there the fiduciary companies, fiduciarias, which is a third-party arm's-length administrator or fund manager that you have to, by law, use whenever you do a crowdfunding project in Britain. And they create all sorts of backstops based on the experience that we had down there with this fraud. For example, you define what is the break-even point in the project. And all the money from the investors goes in escrow until you reach that point. And then the fiduciary company has a third-party auditor that it's called interventoria in Spanish to effectively make sure that the developer is within budget and doing things properly. Otherwise, they don't release the funds in a form of draws like we see with the traditional bank lending here in the States. And then you cannot use the deposit money, for example, when you sign a contract, you know, with money at risk from the crowd. That is the equity that you need to have from your own, and probably friends and family as well. There cannot be any money at risk from an acquisition standpoint, you know, from the crowd. So all these things are not because Colombians are much smarter, you know, than Americans. It is because we have the experience of dealing with this fraud for a few years now. So let me give you a few examples of projects that we have done and where the crowdfunding is really taking off in Colombia. There's over 7 billion people in the world right now. We have over 500 cities with more than 1 million people. There was only 12 cities like that in the 19th century. So the population is growing huge. And urban density is a big problem, particularly in emerging countries. So you have to go up, you have to densify. And Bogota in particular, which is a 10 million, you know, 10 million people live in Bogota, is very flat, like a huge pancake or an arepa batter. And it grows like that because developers say, am I really going to do a skyscraper that is $300 million, $50 million in equity, and $250 million between junior and senior? You know, taking that huge risk in pesos at 9%, what's going to happen with it? Forget it. I just do 10 buildings, 6 stories high each, and they create a problem in traffic, safety, and you name it. And this is common, you know, in every city around the world. You need to go vertical, you need to go up. So in downtown Bogota specifically, there's 1.7 million people that work down there, and they live everywhere else. And the commute time is probably around 90 minutes each way. Picture that. It's almost 25% or 20% of the population going in and out every day. And there's only 300,000 people living in downtown. So you got to do a skyscraper, but you can't because of the disconnect between real estate being a long-term play and traditional equity financing being a short-term play. So no one wanted to venture that. We did this skyscraper in downtown, which is the first one in a generation, with over 4,200 investors, and we raised over $75 million in crowdfunding, all cash. There's no senior, there's no junior, because there, as opposed to here in the States, it doesn't make sense to have institutional equity or to have senior finance for the reason I explained. So it's happening, it's a reality. So in a way, is the population investing in projects that effectively solve their global needs for a profit. Because you created a pent-up demand of 1.7 million people, and now you can develop probably 50 projects more down there, and they will all make sense. Then we said, how can we incorporate the intelligence of the crowd to the design of the projects themselves? Because we realized that the collective intelligence, as we were saying, is so much greater than the individual ones, and we started hating experts like ourselves. And we started seeing that we had to be curators of the true intelligence of the crowd. And we said, who are we from the typical development, arrogant point of view, top to bottom, trickling down knowledge and expertise as to what the ideal office building would be? And we asked the crowd, what would make the workspace ideal for you? What would make you really want to go to work? And we asked a crowd of over 42,000 people in Facebook, and we created a hypothesis as to what that workspace should look like and should be. And they came with all sorts of ideas, you know, and have little time, so I won't bother you with that, with the conclusions, but they were astounding. And once we had that hypothesis done, we teamed up with a crowdsourcing platform out of Berlin that had a database of experts, and interior designers, and architects, and all sorts of creative minds that we were not, from all over the world. And they came up with over 80 proposals from over 20 countries that were absolutely fabulous, for a fraction of the cost that it would take us to hire any other creative firm, you know, in any of these places. By the time we finished the crowdsourcing campaign, the project was fully funded, because people knew about the project and they liked what they saw. They understood, you know, the intricacies of the project. And that is very valuable, because that will preclude many projects from going south, particularly if you have a crowd of people analyzing your project for a fraction of the cost. You will know whether you move forward or not eventually. These are some of the proposals, you know, that we got. And then we were interested in seeing not only how projects could effectively let people participate in assets that were privy to the larger investors before. Obviously, the conclusions of that, you know, are higher returns, more safety, etc. But also how crowdfunding could take place in projects that were absolutely impossible in the traditional equity funding place. And in Colombia, in Bogota, there's not such a thing as an art district like we have here in Seoul. And I really like art. And in Latin America, there is huge potential in the contemporary art marketplace. But these young and upcoming artists, they don't have the means of being exposed to collectors or to galleries, or to even, you know, pay for the materials that they need to produce this fabulous art. So thinking about how business could be meeting that need, you know, for a profit, we came up with the idea of buying a bunch of houses in a specific neighborhood in Bogota and refurbishing them with a partner and friend, Alejandro Castano, who's a visionary in the art world. And we refurbish these houses, and we create live workspaces, and we give them to young and contemporary artists that are curated by a group of experts, one of them with the Tate Museum as well, for example. And these guys pay us the rent in form of art that we take at a discount of 50%, which is exactly the same that the galleries charge them with, you know, anywhere in the world. So when I first went to the bank, just to illustrate the difference between traditional equity funding, you know, and crowdfunding, and I said to them, listen, I have this great story, it's very inspiring. I'm going to put 30% down, you will give me a mortgage on 70%, and I will pay you in paintings. They looked at me and they said, why don't you pay us in poems? Go where I die. And so it didn't happen. But we created, we started talking to collectors in the crowd, and they effectively said, hold on, so I have have the opportunity to talking about the behavioral economics and the inspiration of the psychology of the crowd. So I have the opportunity to really help these kids, and I love art. And I'm going to be investing $20,000, and I will get, you know, some rent and the future appreciation of the real estate handled by a third-party fiduciary company. And I will have access to these kids, and I will interact, you know, with them, and I will get, you know, be part of that great collection of art, you know, I'm in. So that gives you an idea of what can be done. So then we thought, you know, but what do we do to integrate the less privileged ones? What happens with the guys that don't even have $20,000 or $10,000 to invest? And we created a concept called My Ideal City, which is a continuous design platform where people come, they give us the needs, and somebody comes up with solutions, and we try to fund these ideas, you know, consistently. And people started talking about how great the graffiti was in the city when some others thought, you know, that it was a bad thing for the city. It happens to be that Colombians love their graffiti, and they started to put to upload in the platform, because everybody in Latin America has a smartphone, you know, before even having a TV now. So they effectively started to upload, you know, images about their favorite graffitis, and we created like a competition. They started to vote out the best ones, and in the you could call it the CRES art fair in Colombia, which is Art Ball. It's one of the most important art shows in Latin America. We created a space where the winners came to recreate, you know, their work in a form of integrating them to society. So that was a true amazing experience. This is some of the work that they were doing in the show. And then we saw, for example, that in every corner in Colombia, there's a street performer too. So we decided, why don't we take that lesson from the graffitis, and we create the first urban circus, you know, in Colombia. So choreographed by somebody, you know, professional. So we're working on that. Just to give you an idea of what can be done thanks to the fabulous Jobs Act. I think, you know, that in 1933, the New Deal came together. And I believe that thanks to the Jobs Act, now people can participate, for example, in a project like this. Taking our experience from Colombia and working with a self-imposed fiduciary company, you could say that the term is wrongly used, because that is not defined here. Please correct me if I'm wrong. You know, it's in the States, it's a third-party professional fund administrator. And with the help of DOC, for example, we managed to create an improved version of the system that we have in Colombia. And we work, you know, with a third-party fiduciary company, and we put the money from the crowd in escrow, and so on and so forth, as I told you. So now, out of the blue, great assets like that one, which is AKA Wall Street, project 3 blocks off the World Trade Center, you know, is owned for the first time in 80 years by people from 6 different countries through crowdfunding. So effectively, the implication of that is huge, because you can have somebody in any geographic location having access to the type of assets that were privy to the wealthiest before. Now we're doing another one, which is 17 John, and we took the example of the crowdsourcing design that we were doing, and we're doing that here in New York as well in a competition that we launched this week, in Social Media Week, because we want people to help us define what the product is going to be in a bottom-up approach to architecture and interior design, and to effectively crowdfund the project too, and in increments, you know, that are lower and lower as we make progress in our administrative capacity. So what is the common element that all these projects have? That effectively crowdfunding enables a need to be met by business for a profit that effectively can be distributed amongst the participating investors in the crowd, and that levels up the playing field for everyone. Because you will have population investing the solution of their own needs for a profit through real estate. But it takes a huge change from a behavioral economics standpoint, because instead of finger pointing and waiting for somebody else to come and do it, we need to do it. And attorneys are going to play a huge role in the market space. There's an incredible opportunity for all of you guys to really be part of this, because the one thing you need is an attorney to help you go through the legislation, the regulation, to take advantage of the opportunities, and to weed out fraud entirely. We are working with the with professors and investigators, from a number of places, and everybody is paying careful attention, to that specific issue. I hope that we don't need to go through here in the States through the same painful initial steps that we went through in Colombia 20 years ago. It would be self-defeating purpose, that we cloud this fantastic opportunity that we have with some fraud, and the typical scammers, that try to take advantage and opportunities of the crowd. So just to finalize, I would say that, as I said, in 1933, in 1934 exactly, the New Deal, the so-called New Deal was created. I truly believe, that we are in desperate need of a New Deal. And I believe that crowdfunding may as well be the opening gate for that New Deal. Thank you very much.